Hello everybody, welcome to Trader Merlin. Obviously my name is Merlin. Hope you had a great trading session out there today. A little bit of housekeeping here. Today we're going to have one of my old friends, long-time Online Trading Academy associate, John O'Donnell, will be joining us after we do our top 7 markets. He's got a lot to talk about. Today we're going to talk about post-crisis life, or life post-crisis, kind of what's going to happen after all this. We've been talking about some areas of our markets which may be significantly impacted, and I think if we take a step back, there might be some more opportunities out there. So that will be our program for today. We're also going to bring back a feature that I did last week called the Chart of the Week. I almost want to do my own personal follow-up, which I may do tomorrow, but John will do a Chart of the Week for us as well as we progress through today's show. So let me get things started by going through our top 7 markets out there. Hopefully you guys did well today. It was, for all intents and purposes, flat compared to most of the other trading days. But I'll start off with some charts here as I get you all ready to rock and roll. So let's start off with our main chart, and I will show you what's going on there with regards to today's action. Now, we're going to start with the worst performer, which is going to be that Treasury yield again. It seems to be ping-ponging between the best and the worst. Here is your 10-year. As you can see on a weekly basis here, it looks better on a daily. Let me switch that over to a daily for you. You can see right there, rallying up a little bit of a green candle out there today. That's because the yields were dropping, down 1.26% today. And, nothing overly noteworthy, just we're at 0.627, getting close to that 0.5 mark that we achieved, again, back in early February, or early March, excuse me. All right, that was your worst performer, down 1.26%. From there, it's actually all positive. Russell 2000 finishing the day up 1.28%, almost a 14-point move to 1,085. It's down a couple of points in the after-hours session here, but all in all, not a bad continuation day here for the Russell 2000. All right, Bitcoin is our next one. Bitcoin actually looking fairly decent. These numbers, let me refresh this because those numbers, it should actually put this at number 1, but I may have to leapfrog here and change some numbers because they always tend to change on me real quick, as they did here. All right, well, I'm not going to do Bitcoin now because that should be number 5, but it moved its way up much, much higher. NASDAQ is now our 5th place finisher. 76.30 for the NASDAQ 100, as you can see on the screen here. I've got that nice little green candle on the day, which gave it about a 1.72% gain on the session, putting it in your 5th place spot. All right, S&P 500 coming in our 4th place. Here is your ES, and yes, I'm running through these rather quickly today, simply because I want to get to John as our guest. Your S&P, again, has a small little green candle after 2 pretty aggressive red ones. Noteworthy to me because we did close near the high of the day. I actually shorted this right near the end and took a little bit of a loss. I'm actually still holding 3 ES shorts right now. I'm still holding my 2 crude oil longs, which we'll talk about here in just a second. So that was your 4th place, was the S&P up 2.28%, 56-point move. That's when it was trading at 2,526. Right now you're at 2,518. So a little bit of a drift down here in the after-hour session. Okay, number 3, podium time. Looking at gold, here is your GC futures contract. Finally, a little bit of an update to 1637. When we closed, we were at 1627, which was a gain of 3% out there for gold. So we're up a little bit more than that. Again, I do see that challenging number of 1700 being achieved relatively soon here. I think you're going to see it start to move back up. All right, now I can go to Bitcoin, which had a 5.2% up day. It actually was a lot more than that a little bit ago. You can see we had a big spike on Bitcoin. It's brought it to about 7,300. That was at 10 o'clock this morning, and then it's given a bunch of it back. So we're down 500 off of those highs, but still a 5% gain on the day for Bitcoin, which puts it at number 2. But none of that compares to the chart of crude oil. You guys may recall I've been telling you that I've been buying crude oil and holding on to crude oil because I think that the Saudi Arabians and the Russians probably see it's in their best interest to have higher oil prices. Apparently they couldn't figure that out on their own. Lucky for me, President Trump says, hey, they're going to cut by 10 million barrels. And all of a sudden we saw at one point a 34% increase in the price of crude oil today. Actually finished the day up 21.66%, finishing at $24.71 on the day for crude oil. So a great move up there. I am still holding 2 crude oil future contracts long, but needless to say, when you're holding 2 futures contracts and it jumps 21%, it makes for a great day. All right, so let me see if I can do this one today without messing up. We've been talking about or we've been having guests on the show lately. I'm trying to do a lot more with regards to guests and who comes on the program because, of course, I love having guests on the show. Now, our first guest here has been with us for, he's been on this program many times. He used to do the weekend edition with me, and he was on almost every single day every single Friday back in the day. So, without further ado, here is the Ambassador of Opportunity, John O'Donnell. Welcome back to the show, my friend.
Hey, Merlin. Thank you very much. Good to be back.
It is. It's a privilege to have you back here. We've got a lot of people here that are giving shout outs to you and actually glad to have you back on the program. They're getting tired of my just trading stuff. They want some macro pieces. So how you doing? I see you got your Relentless Commitment shirt on.
I got my relentless commitment. Why shouldn't we be relentlessly committed? You know what I'm saying?
Absolutely.
At the end of the day, this is the time of opportunity. It's a lot of people look at crisis and consider it danger, but danger is a two-sided coin. On one side of the coin, on crisis is a two-sided coin. On one side of the coin is danger. The other side of the coin is opportunity. And as you can see, what's happened to volatility, what I've called the VUCA of this era, volatility, uncertainty, complexity, and ambiguity. We are right in the throes of it. And, I like to position this crisis that we're having. I call the biological crisis that we're having a pin. And it's the pin of the biological crisis that burst the bubble. But the bubble was in the valuation of stocks, in the bond market, especially the corporate bond market, and in many cases in sectors, the real estate market, especially commercial real estate. So I look at this virus, this coronavirus, as the pin that burst the bubble.
Well, with this point, we don't really know exactly what's going to be the final outcome of all this, and I thought it might be nice for us to maybe look at further down the road. Of course, we can all speculate. If you go back 2 weeks, the expectation was that this would just pass, it simply disappears, we go back to our normal lives. I think that everyone's coming to the realization that that's not going to happen. I went out yesterday because I needed to get some dog food, so I went to Costco to feed the beast. And, just the way that things function at things like Costco are fundamentally different. Very orderly lines outside, hand wipes when you go in, markers all over the floor showing you here's 6 feet of distance to stay apart, limited amount of people in the store. I have friends that are telling me, man, as soon as this is over, we're going straight to the bar and we're going to have a party. And I'm thinking, yeah, I don't know. I think that it's fundamentally going to change society a little bit. So let's talk about life post-crisis. What do you see happening, maybe from a macroeconomic perspective, and then maybe we talk about it from a financial perspective and who might stand to gain or lose in this?
Well, the first thing I think we have to do is that we have to recognize we're all vulnerable. And, 2 or 3 weeks ago, certainly by mid-January, I don't think any of us were really sensing the threat or our vulnerability of how toxic this virus really is, and that it can spread through community. And what that means is that any of us, we could be symptomatic, but we could also be carriers and be spreaders of this virus, and of course not even know it. And that could be to strangers, it could be the coworkers, it could be to family members. And I think that alone, that risk, that profile has, I think, perhaps changed us forever. Epidemiologists have warned us for decades that there was an opportunity for a pandemic. Obviously, our healthcare system was caught in a condition of being underprepared. Staffing is concerned, the system we're in the hot spots of our country, especially New York, perhaps New Jersey, and in other hot spots like Detroit and New Orleans, the whole medical system to deliver care is getting overrun, not only with ventilators, which is a very sophisticated piece of equipment. And by the way, if you don't believe in supply and demand determining price, just look what's happened to the price of ventilators.
Right.
Right. But I think that alone is going to change us forever. Now, there are those that are opining that we may see, a second wave of this in the fall or the winter. We don't know what we don't know. And I think that's one of the scariest of all about going forward. We really don't know what we don't know. We're in a period of when it comes to biological health. Um, we're in a new era as far as I'm concerned. How's that going to impact our behavior? Well, let's look at it sector by sector. Um, Price of gasoline's coming down simply because of supply and demand. We've had complete demand destruction in the transportation sector. You find airlines today that are running at about 10% capacity. How many people are going to run out there and or just can't wait to jump on an airplane, be cooped up with another 200 people, in a in an aluminum shell flying across the country where all the air is being recirculated. I don't know how long it's going to take for the hotel travel industry to come back. I think this is going to take a significant amount of time, and it's going to really have massive impacts on our behavior. What about automobiles? Are you going to want to travel across the country? There's probably going to be some travel restrictions be some legacy with this. I certainly don't think this is going to get over in 30 days. I think I'm cautiously optimistic like everyone else, but if I had to handicap it, I would say it very well is going to be closer to 60, 90 days out there. And I think that's being optimistic, but there'll still be legacy drag effects on our consumption and our behavior.
John, let's. You mentioned a bunch of different companies there, and I was trying to follow along with the charts here and give TJ credit. The chart master lives vicariously through me, I guess, today. I'm looking at the areas that are really impacted by this. And we did a special show a couple weeks back saying how to profit from the coronavirus. And certainly there's the obvious things. There's the airlines, there's the cruise ships, there's the hotels, which I was bringing up some charts here, full screen. Here's General Motors. General Motors is also getting hammered. Number came out today about automotive sales absolutely plummeting. Now, I think we all would understand and agree that at some point, those automobile sales will probably recoup. People will get back to some semblance of normal. And of course, driving is amazing because you want to social distancing. Just put yourself in a car by yourself and in your distance. But there's other areas. Like, let me real quickly look at SPG, Simon Property Group. This is one that you mentioned a while back, SPG, and we've talked about this as both being rather bearish on the mall sector, period. Now, here's a daily chart of it. I know you probably can't see this one, John, but I'll just walk you through the weekly. This thing has been dropping pretty steadily since its peak in 2016. Of course, it's absolutely being decimated right now. And just to put it in perspective for people who might be listening to the podcast, on July 25th of 2016, this thing was trading at $229. As of today, as of right now, it is currently trading at about, looks to be about $45. So this thing is operating at a huge discount, but this is one sector, John, that you mentioned a while back. I tend to agree that this is one that may not recoup. This is malls. I think fundamentally, if this virus issue persists, malls are a dead animal. Who's going to want to go to a crowded place with other people? So Macy's laid off 130,000 people. You've got Pacific Sunwear, Sears, Bloomingdale's, all these mall-related companies that to me are just going to evaporate. What do you think?
Well, I think you're right. I think there's going to be a massive consolidation. I think the real estate will have to be repurposed. I think our behavior will drive this. We've all, with this dose of working from home, with companies like Zoom, WebEx, etc., YouTube, that more and more work is going to be done at home, more and more shopping is going to be done at home, and whether we're social distancing, like thinking about being 6 foot from one another, we're going to figure out ways in the pattern of our lifestyle to distance. I have no interest whatsoever in going to a mall. If I never set foot in a mall again for the rest of my life, I don't feel that my life has lost anything. I like the service of companies like Amazon, companies like Target and Walmart are beefing up their order entry home delivery capabilities. And I think this virus is going to accelerate that, and it's all going to be driven by a change in consumer behavior. And, some of this will be top of mind, and we'll be very conscious about it. and some of it will be kind of under the waterline. They'll be kind of subconscious. For instance, are you interested in hanging out at a movie theater right now?
No, not at all.
Not me. I mean, that we've got other ways to deliver entertainment into the home. And I think our home is going to become more and more important as our refuge of safety. It's our refuge of being distanced, being surrounding ourselves with loved ones to love and protect. And I would imagine most of us are going to figure out how to be more productive from home. And thank God we have the internet.
Yeah. Speaking of internet, there's a bunch of chatter coming through about web services and things like that. Let's quickly take a peek at Amazon, and this is for the podcasters. I'm just going to kind of really quickly walk you through this. If you go back we'll just go back a few years here with regards to Amazon, and we'll go back to, let's say, 2015. Amazon is trading at about $290. It hit a high just, let's see, this is a weekly chart that I'm looking at. It hit a high of right around $21.85, somewhere in that ballpark, maybe a couple bucks higher than that, but $21.85. It's fallen in this coronavirus issue or crisis to a low of $16.75. So it's, about $600 off, which of course would be a steep discount. It's now bounced pretty significantly, sitting presently as we speak at a closing price of $1,900. So it's still, $300 off its high, but Amazon really doesn't feel like it's taken much of a hit. And I agree with, there was a woman in the YouTube channel, which will give you props here. Sheena Realtor says Amazon will fly. The question now for you, John, if we look at something like Amazon, which has been roaring and very dominant in gobbling up competitors and becoming this kind of online monopoly, how much higher do you see them going? I mean, they're already $1 trillion market cap. I mean, what is are we looking at $2 trillion here in no time because of the change in market sentiment?
Well, look how big the total retail. Look what the total retail spend is. Even if you look at the total retail spend in America, $21 trillion economy, they have a very small relative market share. Now, they have the biggest market share for online purchase category. But you have to look at the whole retail pie.
Yeah.
You know what I'm saying? And it's still growing over time. As consumer behaviors change and they garner more and more market share, there's going to be cries of antitrust. So what they're going to have to watch out for is, regulatory capture. Yeah. As they get bigger and bigger. But look, the Microsofts are going to get bigger with cloud computing. It's estimated that over $500 billion of the market cap of Amazon, which is roughly half its market cap, is in its cloud computing service, AWS. Right. So I think they have a long way to go in the capture of market share. And I think this virus condition is only going to accelerate all of us to change many of our behaviors, both for entertainment, transportation, retail purchasing and consumption, how we source goods and services. I would be very concerned about the advertising category for newspapers. I see a situation where more and more newspapers who lose ad revenue every quarter, it seems like.
Yeah.
I would suggest that more and more newspapers, as we know them, are going to go out of business. I mean, take a look at, I don't know if you're
dating yourself, John. Who the hell reads a newspaper nowadays? Come on.
Well, they work great at my fishmonger store. He calls it fish wrap.
Perfect for fish wrap and moving. For if you're wrapping, your dishes. Yeah. It's the newspaper is pretty much all it is. I want to show the viewers something real quick, just because we have this mindset sometimes, and John, I know you've seen this many years in working with students coming through the doors of Online Training Academy. I said it was reconnecting. There we go. Not sure why we dropped out there, everybody. I can see that the feed dropped. I don't know why it's doing that. All right, well, we are back. It said reconnection successful. I'll see if I can do some work to find out why that disconnected like that. Sorry, everybody. I'm not sure why we got that little disconnect. Yeah, heavy on the system today. I didn't think so. My system's pretty light. Anyway, this chart, watch what happens. This is 2015. It was at $72. And there are people who are thinking, hey, you know what? Macy's at 30 is a great buy. But it's fundamentally changing. All of a sudden now we see Macy's today trading down at around $4.80. My concern is you will see this company go bankrupt or somebody buy the assets and it will become purely an online thing, because the amount of cost for overhead when you have a lack of customers coming in is going to be huge. So keep an eye on these types of companies, either as continual shorting opportunities, malls as shorting opportunities. I even think some of the cruise ships and airlines right now could still be in that category, but airlines will come back. Those, as I mentioned yesterday, John, airlines are a necessity. They will not go away. Going to Macy's at the mall may go away simply because of our change in sentiment because of this coronavirus and maybe the next virus to come down the line. So I just wanted to show that chart to viewers because I had somebody ask me about Macy's as a buy at $5, and I said I wouldn't touch it. I think you're going to see it go to zero or get absorbed by somebody like Amazon.
Well, I agree with you that airlines aren't going to go away. I believe traveling across the country is essential. The real question I would have, there's two categories of travel. There's leisure travel and there's business travel.
Right.
Business travel is, for all practical purposes, a necessity. It certainly was before the coronavirus. However, look how many meetings are now taking place with Zoom and WebEx and various and Skype. And so many businessmen may come to the conclusion that maybe I can cut back on that business travel. It's expensive. I know face-to-face meetings are valuable, but perhaps instead of taking 12 trips this year, maybe I'll only take 6, and I'll fill in the other meetings, with a virtual meeting. So what leisure travel, you tell me. I mean, people that live in the north, cooped up for a tough winter, are they going to want to get on a plane and travel to Florida? Probably so, just to thaw out their bones, if nothing else.
Big Eb out there says, would not touch Kohl's either. I tend to agree with you. Here's the chart of Kohl's. Kohl's looking really ugly as well. I mean, if you go back, it was falling long before the coronavirus, right? That's what's, to me, noteworthy about these guys. Kohl's peaked out in 2018 at about $80, $83, and presently, I think you might be sub 10. We're at about $11.50 right now. Yeah, I agree. This, to me, is a little bit different than a Macy's, because Macy's, they're almost always in a mall where you have massive groupings of people. Kohl's generally is in strip malls, which isn't quite the same. It's a little bit different, but I agree. I think that these companies are in for a world of hurt.
You have to ask the question, is the whole department store model broken?
Right.
Maybe the model of the traditional department store as we know it, like a Macy's, is a broken model. You see what I'm saying?
Yeah, absolutely. Well, it's just change. It's evolution of commerce and marketplaces. And hats off to Jeff Bezos for having the vision years ago to do what he did. John, go ahead. You want to say something?
Me?
Yeah. You're good?
Look at Lululemon. Lululemon's held up pretty good in the face of all of this as a retailer.
And bravo. I don't want to see ladies, don't give up your skin tight stretch yoga pants. Those are good. They're winners. I'm a fan.
The skin tight yoga pants are the only thing that tell the truth.
Right. The social mood barometer, right? Is that what it was? John, you got that chart, the table you had earlier, right?
Yes. Which one are we speaking at? I sent you 3.
You sent me a table with the different recessions and things like that.
Oh, yeah, I have that handy.
All right. So what I want to do, and I'm going to give me a second as I got to get my prep and everything right here. We're going to do a quick little segment here called What do you got for us?
Well, I assume you have up the chart of the week, which is really the table of the week in this particular case, which shows the recessions that we've had since August of 1929 all the way through December of 2009. And I think they cast a very important piece of information, although the cause of this recession is different, or at least the catalyst to cause this recession is different, because in many ways this is a self-imposed recession of just locking everybody down.
Right.
But that being said, if you take a look at the GDP contraction line, you see if you add all those up from a high of 26.7% down to a low of 0.60%, you see that the median GDP contraction was only 2.7%. The duration of these recessions ran from a peak of 3 years, 7 months, all the way down to as low as 8 months, 6 months in 1980. But the median is about a 9-month recession. I want you to think about this recession that we're in, Merlin. I think we're already in the recession. I think it started in first quarter. It's going to accelerate significantly in second quarter. I want you to think about the possibility that the duration of this recession we're in, call it the coronavirus-led recession, is going to be somewhere in the vicinity of 9 months to 12 months.
Okay.
Let me just throw that out there as a thought. And then the time until the next recession was on a mean of 4 years and 2 months. But, we've had some that went much longer. We had one in 1961 that went over 8 years and 10 months. And look how long it's taken us. The last recession that we have recorded here is June of 2009.
Yeah.
So we're well into a decade, and this is why you and I on Power Trading Radio, starting back many months ago, we're talking about the inevitable correction that was to come. I don't think any of us knew it was going to be led by the coronavirus. At least I certainly didn't. But here we are right in the middle of it. So what do you think about that 9-month figure?
It's an interesting one. I don't know if I personally think it's going to be longer. And the only reason for that is there's just too many unknowns at this point, right? There's the expectation this is all going to just go away and everything's resolved. I think what you'll see is Q1's earnings, which start this month actually, are going to really show the initial impact of coronavirus. It's Q2 earnings, which will have all 3 quarters or all 3 months of earnings impacted by quarantine. I feel like we're going to be slowly coming out and getting started again. So I have a feeling it's going to be a very slow start to get the economy back up. A lot of people are expecting it to be this very sharp V bottom. The longer this goes on, the more people that get fired, the more layoffs. I mean, today was ridiculous. Let me show you one more chart here. This is one that just is going to make you go, you got to be kidding me. Let me see which screen do I got there to get to that one. Take a peek at this chart, guys. This is what I was going to do as the chart of the week. Last week, remember, we had unemployment claims that were supposed to be 282,000. They're expecting it to be 1.6 million. It came out at 3.2. Let's up this as of what we saw today. Okay, so this chart is just epic in misestimations of unemployment claims. Look what happened today. Previous, we had 3.283 million people file unemployment claims, right? The expectation, as you can see, was just slightly higher at 3.6 million. So they were expecting in that 1 week period where a lot of companies are layoffs, we only got 400,000 more. Look at what we ended up with. We had 6.64. We basically doubled again. So they talk about this coronavirus having a series of doubling. Our unemployment claims are doubling. 6.6 million people out of jobs. I don't think we'll see 12 million next week, but we could easily see this thing getting up to the 8-9 million next week. And all of a sudden now we have ourselves in a very, very dire situation, John, which if I go back to your numbers, this GDP contraction, this begs the question to me of how deep do you think we're going to get with GDP contraction? I mean, could we see a 26.7% drop, which is the highest we've seen in any of these recessions?
Yes, it could be greater than the Great Depression. As a matter of fact, that was for that whole period of time. But, Morgan Stanley and Goldman Sachs are talking about second quarter GDP being somewhere between a negative 25 and a negative 30%. So, and they're looking for some kind of recovery in third quarter. Let's talk about bottoms.
Okay.
I don't see a V bottom. I don't see an L bottom. I don't see a U bottom. I see a W bottom, a stretched out W bottom. You know what I mean?
Yep.
That's what I see. And I agree with you. I don't think it's going to happen in 9 months. I think there's going to be unknown legacy impacts on our human action that, this thing is going to leave some psychological scars too, not only financial scars, but it's going to leave some very deep psychological scars that no economist can take into consideration. So I think all these estimates are just wild guesses, to tell you the truth.
You know,
Nobody knows for sure.
Brendan said something that was rather interesting. Brendan, that's a good comment, and it's unfortunate, but I think you're right. He says the damage to the economy will kill as many people as the damn virus, and it could very well. I'm just
Well,
talking to people that I know, and I see already people who were doing rather well in this market environment all of a sudden hit the skids and have very, very significant hardships in under a month. That's scary to think that all of a sudden, everything that you've been working for gets just brakes put on, and all of a sudden you're in despair. And
absolutely. And, there's going to be other impacts of things like probably a stepped up use in alcohol, a stepped up use in opioids. I would assume there'll be some increase in suicides. I mean, there are going to be some damage on the other side of this thing that's
Sure.
going to take. That happened during the Great Depression, by the way. The
Of course.
same thing happened during the Great Depression. My father's generation, my father was born in 1910. So in 1933, he was a 23-year-old young man just, trying to make his way in the world. And he told me it was devastating. What seems to be good news, Merlin, is the banks seem to be in pretty good shape. The banks
Yep.
went through a period of recapitalization, and the bank's balance sheets seem to be in pretty good shape. And of course, they've got the Powell put behind them on virtually everything they touch. So the Fed is going to backstop this to infinity, it looks like. So I'm going to pull out an old Richard Nixon saying right after he took us off the gold standard in 1971, and you can watch that on YouTube, by the way. He said, well, I guess we're all Keynesians now.
Good one. Well,
And Merlin, you know my background and where I lean philosophically. That's very hard for me to say.
Yeah, it is. Very tough to say. I got to give a shout out to Wendy in here. It says, I'm investing in marijuana stocks. Well, Wendy, be careful with that one. If you have any insights on gold, which it ripped up to 1,700, was looking great for a little bit, and all of a sudden starts to drift back down. What's your prognosis for gold going forward?
Well, I feel good. I feel good about gold in that it's held its valuation. It had a nice bump today. And no, it's, the 1,700 number. I don't have a problem seeing, if you look at the price of gold relative to the price of equities, if you look at the price of gold relative to the price of some of these ETFs in specialty sectors like, real estate, gold's held up pretty well. What's interesting about gold, and I think why it took a bit of a dip from that 1,700 level, is that gold is very liquid. And when the margin calls started to hit in the early days of just the tremendous downcline in equity prices, when people sell what they can sell so they can get liquid. Gold is always liquid. I mean, plus or minus a couple of bucks spread between bid and ask, you can always get cash for your gold.
Yeah.
So a lot of institutional investors, look, there's only $6.4 trillion worth of gold in the world. And when you look at all the fiat money and all the derivatives that are out there against it, gold will continue to be a good store of value. That does, but Merlin, there's not a lot of inflation right now.
Right.
There's because of demand destruction. There's no real inflation, but we haven't had inflation for a year plus. But there's still no inflation out there.
Right.
Why not? I think it's because of primarily global demand destruction.
I agree. Sheena says inverse head and shoulders on gold. Yeah, I mean, if you're calling that a head and shoulders, that's worse than the Quasimodo hunchback of Notre Dame right there. That's a pretty subjective one. I personally wouldn't call it an inverse head and shoulders. Your neckline's way too low, and maybe on another show I can spend some time there. I realized what happened. I cut out on my microphone when I switched. I have all these different scenes and shots for the show today, guys, so I apologize if I lost you. So for Wendy out there, we talked about this one on the program a while back, basically saying, look, MJ has been getting crushed. That's the ETF, which tracks a basket of securities in the cannabis industry. And my joke, which I was on mute, which I thought was kind of funny, is that, well, I don't know whether you say you're investing in cannabis if that's to buy companies like this that might be going up in value, or you feel will appreciate in time, or if you're, saying buying the marijuana industry is basically going down to a dispensary and buying a bag of weed so you can stay home and enjoy it. Those are two totally different things. But if you're investing in it, might not be a bad time. MJ has been absolutely crushed. There are some other companies out there that some of our users in the room will tell you have much better alternatives. So you might want to go and pick individual securities. One last one, John. I have Eric asking, he said, what about other metals like silver? And we talked about this on yesterday's show, but I didn't get your take on it. Gold versus silver, do you have a preference?
Well, gold is real money. Silver is gold's little brother. Ironically, silver has a history of being real money longer or as long as gold. Silver has an industrial component to it as well. And really going to depend on how much the economy slows down. But, silver is a good store of value. If you take the price of silver and divide it into the price of gold, you would look at the gold-silver price ratio. This is one of the lowest prices for silver as measured by that ratio, going back to biblical times. Going back to biblical times, for centuries, there was a 15-to-1 price to ratio between silver and gold. So if you were to take the spot price of gold divided by the spot price of silver today, you can see that ratio is way, way out of sync. So, but I would always look at silver as a poor man's gold. But It's a good store of value.
Yeah.
Why not?
Yeah, well, I'm a fan. A question for me came through there. People asking me questions? All right, I'll take it. Question for me was, Merlin, what's your favorite crypto and why? And Brendan knows me well. He says it's probably Bitcoin. I can't say which one because it depends on what you're trying to achieve. If you're looking for a store of value and a digital kind of gold, Bitcoin without question. I also like Dash. I like Ethereum. From a transactional scalability, I like EOS, which has been getting slaughtered lately. But that's mainly my there you go. All right. Let's see. Any last little, I guess, because he knows me. Any last little parting thoughts, John? You got anything you want to say to our viewers before you head out, or?
Yeah, I want to tell our viewers that, especially, I would assume many of these viewers are legacy from Power Trading Radio days. I want you to know that we love you. Hopefully, one day Power Trading Radio will be back on the air with Merlin's leadership. And we'll see how that plays out. But I know you have a bit of a younger audience on some occasions. My message I want to get out to the younger segment of the audience. Nobody is bulletproof. There are young people dying from this. This is not a time to be casual. This is be safe. Get through this period of time with your lungs in good shape. This is a respiratory illness. It is nasty. It is lethal. We haven't seen anything like this in our country, since the 1918 crisis. This is a devastating illness that we all need to be on guard about. Do all the local safeguard stuff. Just be cautious. And I know there's some young people out there that think they're bulletproof.
Yeah.
And you're not bulletproof. No one's bulletproof.
No, and John, you've seen thousands of students come through the door at Online Trading Academy, and I think I could probably summarize and say that one of the greatest, probably the greatest factors to success in trading, investing, and any asset class you want is discipline and risk management. And I would say the exact same thing applies to the coronavirus and situation that we're in. Discipline, risk management. You have the CDC giving guidelines for what we should be doing. And I tell you, I went to Costco yesterday because I needed dog food, and I was just going, I wish I had a full-on respirator and like a hazmat suit, because some of these people, I almost wanted to leave because they were not listening to any of the guidelines.
No.
They're walking right up next to you. They're coughing. And they're like, get away from me. But again,
and here's the tragedy of this. You may have no symptoms. You may be infected right now and not know it. You may be asymptomatic. You may be one of those blessed people that have the DNA construction that makes you asymptomatic. But you are still a carrier.
Right.
And so think about it. You're going home and talking to your mother, going home and talking to your girlfriend, your boyfriend, your spouse, your children, your coworkers. This is the time to not play around, people. No. This is these are life and death choices. And the market is secondary to the biological crisis.
Yep, I agree.
It's secondary.
Totally. John, thank you for coming on. It's been a while. I'm hoping maybe we can start to get you back on with some regularity now that I'm starting to get the office situated. The viewers will be happy to know fiber optics should be installed tomorrow. So hopefully, we had two drops today. I'm not sure where that happened or why, but hopefully that will be remedied going forward.
I really admire you and respect you for starting this show. I know how much you love producing, delivering the Power Trading Radio Show. I enjoyed it as well. And this is just, you carrying on, making contributions to your followers. And if I can help in any little way, I would welcome the opportunity to contribute any way you'd like.
Well, I'm going to hold you to that one. You and I both love doing the show, conveying information, and the big difference is on Fridays, I can drink on the show. Actually, I can drink any day on the show now that I'm under guidance. But we have a happy hour Friday, so I'll encourage everybody tomorrow to bring your beers or cocktails with you from the safety of your home in quarantine. All right, John, thanks so much. I appreciate you coming out, and I'll talk to you about your next appearance on the show.
Peace.
He's out of here. All right, so today, at least I think I got my mic muted properly, or unmuted properly. Good, yes. There we go. Hit that like button, guys, if you enjoyed John O'Donnell on today's show. Again, this has been a relatively new format for me with a whole new piece of technology. So, again, I apologize if there's little glitches and bugs here. I'm doing my best to work all of that stuff out. I kind of jumped the gun a little bit by showing you that chart of the GDP numbers, not the GDP numbers, of the unemployment claims. I'm going to bring that one back up here because I think it's extremely noteworthy how brutal this is going forward. So let me show that right screen again here before we wrap up, just to give you an understanding of this unemployment claims piece and how quickly it's jumped. For those who might not be able to see this right now, this chart at the bottom of your screen is labeled from 2016 to today, 2020. Now, this one, what's noteworthy here is for the better part of 4 years, there were really no big pops or jumps or anything to do with unemployment claims. It was fairly consistent. We like normality. Markets don't like uncertainty. And all of a sudden, you have this one just ripping to the upside here. Not only was it at 3 million last week, but it's at 6 million this week. To me, this is one of those pieces at some point it's going to catch up to this market and you're going to see it start to roll over. So I thought it might be interesting since John was talking about GDP's number. All right, here's GDP. This was the last month's reading. It's pretty ugly. I mean, we're not seeing any real growth. We're seeing 2.1% annualized growth on GDP. Because of this, I think that you're going to see a significant decline. Now, I'll look to find out exactly where, when this next report on GDP comes out. I can probably find that one out here rather quickly. But I'm coming out with an estimate that's saying we are going to see GDP on the next report probably around 5% negative. So we're going to go like a 7% swing in GDP simply because everything has shut down. I know it may seem a little bit crazy, but I've made some crazy calls. I was wrong on the ADP non-farm employment change on Monday, but I was right on the unemployment claims for today that we were way underestimating it, and we're going to see a big pop. I'm looking right now just to see when this GDP number comes out for the U.S. I believe it's coming out in 3 weeks. Where is it? Flash manufacturing, durable goods. I am not seeing GDP, but probably going to hold it off. And here, advanced GDP comes out April 29th. Right now, they're not seeing expectation numbers on this, but I assure you, it's probably going to be pretty darn ugly. All right, S&P should be a bloodbath, but there is a fear of missing out from it being oversold. Yes, I agree with you. And you get no argument from me. I think you're getting a lot of people who look at the S&P 500 right now, and they're saying, man, it was at 3,300. I'll bring up the chart for you guys so you guys can see it. It was at 3,300. Now you're looking at it down in that 2,500 range. It was down to 22. So yeah, there will be those people who are told to buy the bounce. Brendan, you might remember an individual who was on Power Trading Radio's YouTube channel almost every single day, raving about how he'll never sell and how he's just going to be buy and hold forever. This is the situation that I'm worrisome for people who have that mindset, because I do think that there's a buying opportunity coming, but I don't think we need to be so eager to jump on it just yet. Wait till these earnings numbers come out and see if it's really that bad. I believe that Big Eb says 2,100 S&P amid Q1 earnings. I think you are probably right. I think that as April rolls out and we start to get earnings numbers come in, look for these demand zones. The one that just screams at me is this 2,000 mark. Right, there's 2,000. There's one right around just below 2,100 as major levels for the S&P. Well, wait. Alcoa will be the first one to report. That's not that important. But we start seeing those banks, and my guess is this. My guess is you're going to have the banks start to report earnings, and it's not going to look that bad because banks have not been really crushed by this. But as soon as we start seeing the retailers' numbers come in, retail sales numbers, GDP numbers, manufacturing, that's when things really hit the fan. I mean, I think that's when it gets really ugly. So my guess is it won't be the first week of earnings season. It might be the second week of earnings season, but there we go. Okay, guys, somehow you've managed to stretch this show. My initial plan when I first started this was, this is going to be a 30-minute show. That's it. I want to do 30 minutes. And for some reason, every day the show has gotten longer and longer. I think this is the longest show we've done. We're at 47 minutes already with no commercial break. So my only solace is that you guys enjoy it. You're still here. I see a couple people bailing, but a lot of you guys stuck with it for the whole show. If you like it, again, give me the thumbs up button. Share it if you can. Subscribe to our YouTube channel as well as on iTunes, and leave some comments and feedbacks. Always love to hear from you guys. Until then, happy trading. Oh, by the way, tomorrow we have Sam Evans on the program. That won't be as broad of a show. Tomorrow's show will be a bit more focused on alternative investments, I'm going to say, because I want to make sure we understand that there's alternatives to stocks for many people who are in 401ks. I want to look at futures. I want to look at Forex. I want to look at a little bit of options, but mainly currencies and futures. Also, you guys have been sending in a ton of questions, which I really appreciate, by going to tradermerlin.com and sending questions in there. I have them all lined up here. Now, if you can, you have to have a little bit of patience. I've got a bunch of stuff regarding 401ks, probably Monday of next week or maybe Wednesday, depending on what my guest schedule is. I'm going to do a show just on 401ks because there have been so many questions on those. Different allocations, profiles, rules, regulations. So I'm going to do a special show just on that. For some of you, I know you're going to go, I don't care, I know all about it. I apologize, but I need to kind of do some more advanced stuff and a lower level stuff so that we kind of bring everybody up together. So that'll probably be next week, but keep those questions coming. Go to tradermerlin.com. You simply click the little button there to send me a message, and I will get to all those. All right, that will do it for today, everybody. For our longest show ever, thank you guys so much for joining us and for all the participation. I will see you guys tomorrow with a frosty cold beverage on Trader Merlin. Take care.